Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Monday evening, and we are sitting here now on August 2nd. It's hard to believe time goes this fast. August 2nd, 2021, and we're about 6:40 at night or something. Okay, an interesting day. You know, good news on the infrastructure bill in the sense that looks like by Thursday they're intending to have a vote in the Senate. They won't have a vote on this if they don't think they can pass it. That's my guess. So if you see that vote, they'll probably pass that bill. Remember, we're getting close to their August break. They want to be gone. It'll go to the House if it passes, and it's probably going to sit there until September. So you're not going to get anything right away. And even if it passed, it's over a, near a 10-year period. There's going to be only so much is doled out each year. It's good. We need the infrastructure. But the big battle in the House is going to be the bigger bill, the $3.5 trillion bill, not this $1 billion bill, to do more for the elderly, for other venues that is on the table, if you will, from the Democrats. Then we also have the budget that's got to be passed. There's going to be battles galore there. I don't know if they can get anything done or not. They want to get a reconciliation bill where they get to the point where they can pass it with a simple majority, if you will, into the Senate. I don't know that they'll have that majority. Everybody's going to fight about that next bill. That's where all the quote-unquote pork is, as I like to call it. So you saw PAVE take off today and then give a chunk back. We'll see that on the charts. You saw today the impact of COVID. Now the market started off on a beautiful note this morning, and it appeared that the market didn't care about the COVID spreading in the United States. It's somebody else's problem. We saw that on the weekend, China saw a growth slip a little bit because of COVID, and some 32 provinces, including Wuhan, have this Delta variant, and they're, in China, they don't put up with it. They literally put you into a lockdown. So that put oil prices under pressure because they're thinking the factories are going to have to close for a brief period till they get this done. We'll see. How long does this last? Nobody knows. The White House said that 70% of U.S. adults that can get vaccinated are now vaccinated. So a month late, so what? Still there. Let's applaud that. That's a good thing. And now the 30% that aren't vaccinated are getting sick, and we're discovering that all of us, and yes, I have the vaccine, can carry this and spread it to people that aren't vaccinated or to others that are vaccinated. When you're vaccinated, as it turns out, you can get sick, but it's nowhere near what it will be if you're not vaccinated. That's according to the doctors. Remember, I'm having my live webinar Wednesday. You can ask questions there, different markets. You'll also see up here this icon. You can sign up if you didn't get my email already by clicking that on and signing up. When you get that and you sign up, you'll get an email with your user ID and password. My email address is in that. Simply text me any questions that you want, or email me is the right word from that. Okay, let's go to the charts. I still like ARC. It's an interesting chart. It's in the news all the time. And you can see we have sideways distribution. In that sideways distribution, today you had an outside day up. When you have an outside day up, as long as that high is not taken out in the next, let me turn that off so that we're not sitting here with that. Okay, I've turned that off. So when the market has that, as long as that low of an outside day up is not taken out, it's in place. If you take it out, you go back down to the closest moving average or a slow stochastic. As you can see, if that's taken out, the closest right now is the 100-day average. The market's in a pattern with higher lows, higher highs, certainly in the bull pattern. If it continues up, I'd be looking for the 126.02 area, one of the targets, the upper Bollinger Band, and momentum is pointing up. So the chart did that. But remember, a failure takes place if you take out today's low. It's not much of one because it'd only be looking in that case at 118.44 for the first target. The second could be 115.78. When I look at Apple, as I told you, I think the easy, quote unquote, whatever that means, easy trade was all through here. Now it's a very difficult trade. The market, simply put, isn't following through one way or the other. You have an uptrend that refuses to stay over the 18-day average, so the bias is down and momentum is down while the trend is up. Can it enter a downtrend? Not on this pattern. Even if it took out 144.12, you'd have a higher high, lower low. Simply put, in order to get bullish, it's got to stay over that 18-day average of closes, and it's refusing to do so. The action in PAVE wasn't about today. It's really about right here. When a market's coming up and not embedded, the first time you hit an upper Bollinger Band or a lower one, that's where I think the pros take their money off the table. So I'm watching it, and I'm watching that Friday night they passed this in the Senate that they're going to be able to get the bill out. They get it out Sunday night, 2,700 pages. The market roars on that news. It's like a sucker play. You're over the upper Bollinger Band. You only stay over it 5% of the time. You already had a signal to be coming out. Now this gets real interesting for tomorrow. If you take a look, both numbers that make up the slow stochastic are over 80 tonight. Friday, both were over 80, and both were over 80 the day before and the day before. You have a fully embedded reading. So off this break, I know it sounds crazy, I think the pros are going to buy the market. There's a key moving average that I don't share with you here. It's in my enhanced Bollinger Band course. At the end of this, there'll be an ad on that if you decide you want to take it. That's what I think they're going to reach for. So in the morning, I'll discuss this with my subscribers for my SPDR ETFs. When we do the update, I'll record about 9 in the morning. It'll be out to them by 9:30 or so, and they'll be getting what it is. Remember, I've got to record, then it's got to render. So, and I like to get all the morning reports into that. In the XLI, you lost the embedded reading. So let's come over here. Both numbers over 80, both over 80, not there. So day 1, 2, 3. You're embedded. You're looking for the market to get up to the upper Bollinger Band. If it does, you're to take your money off the table. Look at the band, 104.63. Look at the day's high. Gone, out of the position, at least half of it. Now, if you close with a reading under 79, you want to be out of the other half. And that's what it did. So the traders there should have had a heck of a neat little trade and caught some action in it. XSD, you're overbought at the upper Bollinger Band. So long, folks. That's what I think the pros are going to say. This was a vertical price rise. I'd have no idea how to pick that low to get up there. What I do know is it went from lower Bollinger Band to upper. That's a vertical move, and the odds of it staying over that band, 5% of the time. This just took everybody out of a short position that they might have had, and I think the market has to rebuild. PODX, still oversold. Trend and the swing line up, but the bias is down because you refuse to close over the 18-day average of closes. ESGU, starting to point to the downside on an embedded reading. If tomorrow it closes with any reading under 79, you got to be out of Dodge. The market's been acting so-so. It's now got the lower highs, lower lows, but it's still over the 18-day average, and it hasn't lost the reading. You don't want to get what's called stochasticitis. Okay, it's where you're watching every tick on it. You'll go nuts in the head. How do I know? I did. XLE. Now you got a higher high, higher low, and then you break through everything with a higher high and a lower low. You're out of any trend that you had in the market. And you really haven't had one. You've been fighting a battle at the 18-day average, and that's all that it was. This was a contra-trend rally because you were under the 18-day average this whole time. You got up to it right there, and if you look at the market, where it finished, the 18-day average, 50.23, 50.19, you didn't close over it, and this is what you're doing. There's still nothing to do in that market. In the emerging market ETF, be careful here. You're very overbought. You're in a zone where I think the pros are going to take money off the table. So as exciting as I know people want to be long this market, it's one of the favorites of many analysts out there. I'd be very cautious right now. GLD, no trend at all. You're just basically caught in these moving averages and the Bollinger Band, the 200, the 100-day, back and forth with that band. There's just nothing going on there. The miners did better, but who wants to be long a position when you're this overbought and not embedded? So I think when the market got up to the Bollinger Band, and this was on Thursday if I'm right, yeah, I know that I would have told you here, hey, I think the pros are out of the market. And I still think they're out of the market completely, waiting to see what the market wants to do next. TLT, higher lows. It started stalling. You can see you had higher lows and then lower highs, if I'm correct. I believe I am. 149.81, and that might have gone higher than that. 149.69, then down. Now, watch. If it takes this out, it breaks that pattern. It will then have a pattern, again, of the higher high, higher low. Momentum has worked its way off of being overbought. Here you come. Notice how it's flattening out. This is Friday. Now if you take out that 149.69, the target becomes the upper Bollinger Band. We'll see if it can hit it, but that's the target as I'm reading the market right now. FXE, you already got up to the number that I think the pros came out. I'm going to repeat, the first challenge of the upper Bollinger Band is often where people step out of the market if they understand Bollinger Bands and momentum with it. I teach that in the Enhanced Bollinger Band course that you look at right now.